Our new AGCS report identifies the impact of the pandemic on claims trends in the different lines of insurance and how they might evolve in future for entertainment, aviation, property, liability, financial lines, and business interruption. But as a brief overview here, entertainment. The entertainment and events industry is one of the hardest hit by the pandemic. The cancellation or postponement of events and productions is one of the largest sources of COVID-19 related losses for the global insurance industry, bringing a surge in claims. Unlike traditional lines of insurance, it was not uncommon for entertainment policies to write back cover for infectious diseases, and AGCS has been working with its clients to settle these claims. Insurers and policyholders have faced difficult decisions about whether to wait, cancel, or postpone events given the uncertainties around the duration of the pandemic and social distancing rules. Organizers will want to do everything to keep the show on the road, but delaying the decision to cancel can drive up costs. The ongoing threat of further outbreaks and social distancing rules also make decisions around postponement challenging. Aviation. The aviation industry has seen few claims directly related to the pandemic to date. In a small number of liability notifications, passengers have sued airlines for cancellations or disruptions. Slip and fall accidents at airports have declined with a massive reduction in global air traffic, which fell by a record 94% year-on-year in April 2020. Although a large proportion of the world's airline fleet have been grounded, loss exposures do not just disappear. Instead, they change and can create new risk accumulations. For example, grounded aircraft might be exposed to damage from hurricanes, tornadoes, or hailstorms. The risk of shunting or ground incidents also increases and can result in costly claims. And human error incidents may increase due to the lack of routine and practice in flying for pilots and crew. Property. Property damage claims were not significantly impacted by COVID-19 as loss drivers such as weather are not correlated. However, as production lines restart and ramp up, this can exacerbate the risk of machinery breakdown and damage, and even fire and explosion. Restarting a factory is a stress test. We have already seen a few claims related to ramp-ups in the past few months, and there may be more to come. In addition, with fewer people potentially on-site, inspections and maintenance may be delayed, or loss incidents such as a fire or escape of water may be noticed too late, increasing the severity of damage. AGCS Risk Consulting Team has produced a number of guides to restarting safely after a shutdown, which you can find on the COVID-19 Resource Hub on our website. Liability. To date, AGCS has only seen a few liability claims which are COVID-19 related. However, liability claims are typically long-tailed with a lack in reporting. So general liability and workers' compensation claims related to COVID-19 may yet materialize. A number of outbreaks of coronavirus have been linked to high-risk environments such as gyms, casinos, care homes, cruise ships, or food processing plants. Financial lines. Although it is still early in the process, the coronavirus outbreak could result in claims against directors and officers, consultants and professionals, as investors and other stakeholders look to hold them accountable and seek to recoup losses. A wave of insolvencies, as well as event-driven litigation, could be potential sources of D&O claims. The pandemic could trigger litigation against companies and their directors and officers if it is perceived boards failed to prepare adequately for a pandemic or prolonged periods of reduced income. Cyber risks will come in different shape and forms as companies increasingly digitalize, relying more on online sales and remote ways of working. Business interruption. Covid-19 has caused business closures and disruptions globally, which often may not be covered in the absence of physical damage as trigger of coverage. However, the pandemic has impacted the settlement of standard business interruption claims in different ways. On one hand, factories in hibernation will not produce large BI claims as many manufacturers, their customers and suppliers either shut down or scale back production. Conversely, containment measures during lockdowns can lead to longer and more costly disruptions as access restrictions prevent effective loss mitigation and prolong the reinstatement period.